Okay guys, so right now I'm going to be showing you a very quick system that anybody should be able to apply. It's literally very simple. So everything starts off of the 30 minutes time frame. This is what I'm looking at right now. So basically what you want to spot looking at the 30 minutes time frame is basically a strip of structure, something like this, and a break to the downside, something like this, and then we'll have this fair value gap somewhere in here that was retested earlier. Most of the times these fair gaps can hold like more than once. So if you get a retest, like we had the second retest here, then you can actually move to the 5 minutes time frame. I'll move to the 5 minutes right now. And when you get to the 5 minutes, when you get to the 5 minute time frame, as you can see, we retested this fair value gap like close to 3 times, and then something happened there. When you look at it, you find out that just here, when price pushed down, pushed up, it cleared liquidity just around here. So I had a clearing liquidity just there. So that's liquidity taken, liquidity grabbed, and then we moved on to break the lows here. So this here would be, because of that liquidity grab, I will be considering this movement here to be my break of structure. So I'll take that as break of market structure to the downside. So the moment this happens, I'm looking for area. This is sell side liquidity taken. We're looking for buy side liquidity to be grabbed as well before we start looking for the sells. So basically the most valid area we have would be this last blue candle for me though. So I'll take this and I'll be watching just the 50% of it, which is exactly this green line, and you see how price comes straight into that green line. Now to take advantage of this, that's where the 1 minute time frame comes into play. So you can move over to the 1 minute time frame, and as you can see, this is the 1 minute time frame, and you see exactly just around here, after the first tap into that area, we consolidate, we push up. And one thing that is noticeable here is exactly the same pattern we saw on the 30 minutes time frame. So whenever you have one exact pattern that reflected on your trend time frame, the time frame you used to find your buyers, if you have the same pattern reflect on your entry time frame, you want to take that trade. That's like the trades that I'm very confident in. So this one, the moment is swept liquidity, and you can see it broke structure, the structure low here. The most valid one would have been, most people go for this, most people go for this, you can go for this, and I don't support this one, but I think this is valid, this is valid, this is valid. You can choose whichever one you want. Now let's assume you went for this one. If you went for this and you were waiting for a break of structure, your break of structure would have happened just in here, and then you would have waited for a return to the fair value gap, and you have a fair value gap in here. You see that a return to the fair value gap happened just there. You would have been able to take a sell. Sorry, I'm gonna move that over. So after that break of structure, this is our break of structure. I'll mark that up as well. So you're waiting for price to return to this fair value gap, and just this fair value gap will be your entry area. So simple and short, you will have entered here neatly, stop loss above the highs, okay, and we'll target 5R. That's always my target 5R. So here we'll target, I think I'll just take that 5R. It should be 3,500, but I'm just going to take this much. As you can see, that's what you see, that nice delivery of price, zero drawdown. So it's a nice one. Try it out and tell me what you think in the comments.